Lay out your bull case for Netflix for us.
You know, for us, it's just continued growth in subscribers, right? We all know about the ubiquity of their content and the value that it's adding to the platform. If you look at analyst expectations right now, the expectation is that they added more subscribers in 2018 than they'll add in 2019. That's not going to happen in our opinion. They added 50% more content we expect over the course of this year, just based on the cash that they spent. There's simply no way that they can add that much more content and not see it have a positive impact on subscribers.
They're going through a lot of cash right now, right? They're spending a lot of money on new content, and meantime we have more competitors either jumping into the market or poised, for example Disney, to jump into the market. How do they maintain market dominance?
I think a lot of it's distribution. We were talking about CES before. You look at all of the Netflix integrations that are being done out there. It's nearly every device that we have access to now has a Netflix app sitting on it, and that just makes the service that much more valuable. I mean, think about the way that we all use it. I mean, what are you getting more entertainment out of for $9.99 a month than Netflix? And I think that value proposition, particularly should we be going in into a weaker consumer spending environment, is going to be a huge advantage to them when it comes competitively. Everyone's charging $9.99 for their service. No one's providing nearly as much content as Netflix is for that same $9.99.
Why is there so much hand-wringing about theatrical strategies, Roma, and whether or not do they need to even worry about that right now?
No, that's one of those things that's important to creators. And you look at the way that Netflix is pulling creators onto the platform with Shonda Rhimes joining, Ryan Murphy joining. That kind of stuff's really important to them. It's also the same reason they bought a billboard company in LA, so they could make sure that they get that kind of exposure. So it's important to their content strategy. To consumers, doesn't really mean that much.
All right, we know you like Netflix. You cover quite a number of companies in the internet space. What else do you see as big opportunities, and what would you just steer completely clear of right now?
I mean, when you look at the other things that we have on our conviction list, Amazon's on that list, Google's on that list, Alphabet's on that list, PayPal, Grubhub. These are companies that we sort of see as secular winners, share gainers, companies that are continuing to disrupt the industries that they're in. Look at Amazon, the number of retail store closures that we saw last year, hitting a record after the record that we set in 2017. That's only going to continue to push things in their favor. That's sort of our strategy around internet. Those things fell heavily out of favor in the second half of last year because the market just wasn't paying for growth. But we think what you're seeing in the first few weeks of this year is investors still want to own winners, and that's what those companies are.
There's been some dissection today of Amazon. Seasonal revenue deceleration coming out of the holidays. What's important? What levels are important?
Investors want to see this stay a 20% grower in their retail business. That's the
magic number.
That's sort of the magic number. Q4 will be lower than that just because of the historical mix that they get of slower growing categories during the holiday season. But 2019, they have to stay above that 20% retail growth number. That's something that we think they'll do. You look at the value that's being added by the platform as they just continue to expand fulfillment and logistics capabilities. And then you get the AWS kicker, which we're almost to the point where that part of the business is more valuable than the retail business, and may even be in some of our numbers. And that the strength that they're seeing there is only getting more meaningful.
I can't believe I'm bringing this up, but Bezos did tweet about his divorce today, and we've been having discussions about, is a change in ownership structure material? Is it?
Yeah, one of the things that we've written about before as it relates to that structure is AWS runs into a lot of conflicts, customer conflicts, because Amazon has such a wide portfolio of businesses. And so if you're in the healthcare space and Amazon is the reason your stock is down 20%, it may come in, may be a consideration when you're thinking about what web service business you're going to pick, who you're going to partner with. And so we wouldn't be surprised to see a split up like that happen at some point. May not be in the next 12 months, but we do think longer term they find reasons for that business to operate on its own.